Hello everyone, welcome to my channel. I'm Dr. Q. In this video, we'll discuss how to become an effective manager. How to be an effective manager. Firstly, you need to know the goal you're supposed to achieve. Is your goal to get the best grade for this course or to maximize the overall GPA? Is the company's goal to maximize the profit for this financial year or enter a new market or increase market share? Does the food bank want to distribute food in urban areas or rural areas? Then you need to identify the resources you have and what constraints you face. How much time do you have to study? What technology and input does a company have to use? And how many volunteers does a food bank have? And what is the budget? Secondly, the manager must be fully aware of the nature and the importance of profits. Please note that in the economic world, we care about the economic profit, not the accounting profit. What is the difference between the two of them? Accounting profit refers to all the monetary value from the sales of services or products or total revenue minus all the monetary value of costs for producing the corresponding amount of goods and services. For economic profit, it further considers the opportunity cost of self-owned resources or implicit costs. Therefore, economic profit is always smaller or equal to the accounting profit. Give you an example. If you have a small business produce t-shirts, for this business, you own this factory. You work for your own business for its daily production option. You also contribute to your entrepreneur ability you gained from the MBA program and everyday management. Lastly, you put $20,000 of your savings into the business. Other than those self-owned resources, you also hire workers, purchase cloth, pay for utility to produce t-shirts for sale, and those resources are not owned by you. You must pay to obtain and retain them for your business operation. Those are called non-self-owned resource. The costs of non-self-owned resources are obvious and easy to measure. Those costs are recorded in your tax report or your bank statement. Therefore, we refer this type of costs as explicit costs or accounting costs. However, for the ones incurred by retaining self-owned resources, they're often overlooked as they're the owners. They are not so obvious. Therefore, we call the costs of self-owned resources implicit costs. For implicit costs, we can measure by using opportunity cost way of thinking. Like if you did not use your factory on your t-shirt business, what can you earn by using it elsewhere, such as renting out? how much rent you could possibly get. That's the opportunity cost it costs you to use your factory on your own t-shirts business. Here's an example. If for a t-shirts business, the total revenue for this financial year is $120,000, then subtract the costs for paying for the raw materials, such as cost of cloth, packaging, and distributions, and then subtract the cost of the labor or the amount you pay your own workers, and further subtract payment for utility, the sum of which is $63,000. This is the explicit or accounting costs. Subtract that from the total revenue, that leaves you with $57,000 as accounting profit. But don't celebrate too early. You have to decide whether the devotion of your self-owned resources is worthy or not. So if you did not invest your $20,000 saving into the t-shirt business, what you could do about it? You probably can deposit it in the high money market and earn $1,000 of interest. If you did not use the factory on your own business, you could rent it out and earn $5,000 of rent. If you did not work for your own business, you could find a job elsewhere and earn you at least $22,000 of a salary annually. And you could also devote your entrepreneur ability elsewhere and earn you about $5,000. Those are opportunity costs of self-owned resources, which is $33,000 in total. After deducting this part, the leftover $24,000 is the economic profit, which is much smaller than the accounting profit, which is $57,000. But as long as your economic profit is positive, it means the resources are best used here as opposed to elsewhere. The opportunity cost of a self-owned entrepreneur ability has a special name called a normal profit. It's $5,000. It's also called normal profit. It's included in the implicit costs. If economic profit is zero, we call the business break even or just earn normal profit. Profit drives business in and out, and it explains all the behaviors of the business. Why does the business do bundle products? Why does the business enter a new market? Why does the cereal change its packages? Why does the airline practice price discrimination? The simple answer to those questions is that businesses think it earn profits by doing so. Although asymmetric information and uncertainty in future prevent it from happening from time to time, profits will drive the resources holders to devote the resources to the production that is the most highly valued by the society. It means that the business care about self-interest. They're rational and purposeful, which is great. This is a quote from The Wealth of Nations by Adam Smith. It is not out of the benevolence of the butcher, the brewer, or the baker that we expect our dinner, but from their regard to their own interest. All right. This is the first part of discussion of how to be an effective manager. Thank you for watching the video. Please subscribe to the channel and I'll see you in the next one.